Good morning, Fractal Effects team. Please make sure you read the disclosure before we get started. If you're following along with us, make sure it's in a demo account as this is for educational purposes only. We are not financial advisors and this is not financial advice. We'll jump onto the charts in a minute. So obviously today is FOMC. We are going to just use today for educational purposes only. We're going to go over a couple of concepts. We also have crude oil inventories dropping, so oil's not going to be a valid asset as well. So nothing to really take a look at as far as trading. You got to know when to take a break, when to sit out. Also, we're going into the holidays. Keep in mind, December, there's not a lot of volatility. It's actually usually best to just completely take those 2 weeks off. Enjoy the holidays with your family, come back in January after the new year. But we'll go over a couple of things in a second here. Just going to take a look at the early entry model. And as mentioned before, these are not trades that anybody on my team was willing to take today, but just to go over how powerful the early entry model is. So we had an upside expansion model. This is US 30 we're looking at. Look at both of them. So we have an upside expansion model. We had a buy model, and again, we show you how to decipher buy and sell models based off of the expansion models. So all the confluence was there, buy model, upside expansion model. We were green across the board. So there's your blue zone. We're looking only for buys off the blue zone. Now obviously these are early entries. I don't imagine anybody, depending on what coast you live on, depending on what time zone you're in, maybe you were able to catch something like this, again, on any other day. But let's say today there was no FOMC. That would have been a valid entry right off the 20 EMA. A lot of confluence there. But again, if you weren't able to, we're only looking for buys. So when we see moves like this, we're just looking for a rejection off the blue zone. So when we saw it push right through and sweep the lows, I believe it also hit a 4-hour fair value gap up here. So now this is where your bias could change. Even though we have a buy model, anytime you hit a higher time frame PD array or you sweep liquidity, let's say you take out previous day's high-low, or you hit a 4-hour fair value gap or any other higher time frame PD array, your bias could then switch and it could turn into a sell model. But here, we knew that we were only looking for a buy. So if you're only looking for a buy, then none of this actually fools you. So obviously the first candle here at 9 o'clock ripped right through. So there was no way for us to even get fooled by it. Swept the lows. It started gesticulating off of it. But remember, we're not looking for a sell. At any point, if your model is broken, you just stop trading. You don't just switch. So if your buy model turns into all of a sudden a sell, you just stop. That's not what we were looking for. That's how simple the early entry model is. So when we saw these rejections, this was not a telltale sign for us to go short. Instead, what you do is you wait for the market to get above. and then reject off of the other side. For example, this candle, and you aim for a 1 to 3, or just top range. Now, whether or not it actually gets up there, by this point you would have already at least moved your stops to break even and taken some off the table. But it's as simple as that. That's the early entry model. And again, on any other day other than FOMC, it would have been valid. It would have been a valid entry here, and a valid entry here. But on FOMC day, during this week in general, just proceed with caution. Obviously today there's no trading whatsoever. Nobody on our team took any of these trades. But that's US 30. Let's take a look at NAS with the early entry model. Same thing, we had an upside expansion model. We did have a buy model. It obviously dropped. So the only thing we were looking for was a buy. Now you had potential entry here, again, on any other day. And then obviously after the market dropped, there was no taking a sell here. There would only be taking a buy here once the market gets above the blue line, the blue zone here, which again may or may not happen, but it's not something we're even interested in taking a look at. So when it comes to the early entry model, there's only 3 points of confluence that you really want to take a look at. Obviously, one, what is your expansion model? Two, is it a buy or sell model? Make sure those match up. Doesn't mean that you can't still find a trade. Usually the buy or sell model can supersede the expansion model, but then you have to also take a look at the daily candle bias. Like, are we bullish or are we bearish on the daily? Then you also look at your higher time frame EMAs, match those up. And if everything is telling you it's a buy, then that blue zone, which is painted out by our indicator, or at least the next iteration of the indicator, should be out in about a week, then you're only looking for a buy at that zone. You're looking for rejection on the 5M. Preferably, the best kind of rejection off the 5M is what we call two candle rejection. Here's a perfect example. First candle wicks off of a zone. The second candle engulfs it. Now, an engulfing candle, remember, means that the candle body here, the second candle body, completely engulfs the first candle's body. The wicks don't count. But it's just a telltale sign. You got a wick here, and then the next candle engulfs this candle. Then on a smaller time frame, you would look for an entry, or ITL, ITH entry. And as simple as that. As mentioned before, you don't get greedy. You go for 1 to 3. You move your stop losses after you hit 2R, and you take some off the table. So you know it's a profitable day regardless. Now, we will be going over more of these examples, and we'll be including it in our live trading. So we will be going live earlier, only on days where there is no news, any high impact news, or super volatile days. We will avoid those. But we would like to start actually doing more of the early entry models. And by between 10 and 10:30, your goal is to be out. And then primarily focus on the spotlight entry model. There is a third swing trading model that we're working on. Obviously, these are scalping models, but we are working on a swing trading model that should be done by January 1st. That'll be in the Learning Hub. and that you can use to trade stocks, um, swing trade, again, Forex, commodities, etc. Just 1 second. So hopefully there is nobody trading today. You want to avoid the market on these big days. Now in the Learning Hub, we go over the main days that you want to avoid completely. Your FOMC, your PPI, CPI, anytime Fed Chair Powell speaks, all the big ones that create a volatile, super volatile day, you want to avoid those completely. You can see 300, 500 pip drops just like that. We're not trading those things. That's just straight gambling. But anyways, there's your early entry model, and that would have been the TP for the early entry model. You would have entered here. Obviously, 2R, taking some off the table, and then taking out the tops would be the TP here, with your early entry model being above price. When price dropped below, we bounced off the weekly range. Again, not a coincidence that it bounced off of this range. So you immediately saw a reversal happening. There's a 4-hour fair value gap down here as well. With the early entry model, the only other thing that that the indicator doesn't do for you is mark out those higher time frame PD arrays. Now, when I say higher time frame PD array, what do I mean? I'm talking about the daily and the 4-hour fair value gaps, and also previous day's high-low. So you just go to the daily calendar. The daily time frame. Mark them all out. Well, at least the ones that are in your zone. The last low to high. That's the dealing range we're taking a look at. Just mark them out. There's a daily fair value gap right there. Now, these are the only things that can alter and change your game plan. Once one of these is hit, especially a daily or a 4-hour, there might be a reversal happening. You want to be leery of that. Now we drop down to the 4-hour. We mark out these fair value gaps. Now, the spotlight indicator, which is running right now, outlines where they are at least. So you can kind of just visually see, oh, there's a 4-hour fair value gap right here. Paint that out. You get your 4-hour fair value. There's also a 4-hour here in the daily, but we'll just leave it at the daily because it's the more stronger point of confluence. And then simply mark out your previous day's high-low. Pick a color that your eyes will visually recognize immediately. Zoom in, make sure you have your lines perfect. Remember, at any point you're trying to figure out, like, say you visually can't tell if one candle is higher than the other. If you see two wicks that are aligned, just scroll the candle, put your scroller on top of your candle, and you can see all the numbers up here. This will tell you the high, low of that candle. Our indicator's in the way here, so let me just, I guess that's not going to be able to move from there. But yeah, all the information for that specific candle is right there as soon as you scroll over it. And then make sure your high-low is set. So when we drop down to 5M, you now have everything you need. 1, we know that we're sitting inside of a 4-hour fair value gap. We just tapped daily. So this one's already been filled in. We can get rid of this. We just tapped a daily. So you know there's going to be some reversal happening here. That's a very strong rejection point. And as mentioned before, there are people that look for their ITL, ITH here, and then try to trade back to the blue zone, especially if it matches your expansion model and your buy-sell model. For example, today we had a buy model, we had an upside expansion model, and there's your blue zone. So ideally, we're looking for price to get above the blue zone and look for a buy to take out previous day's high. That would be our target. We've already taken out previous day's low right there, that yellow line. We've already bounced off of a daily fair value gap, and we're caught up in the EMAs right now. You want your 1, your 5, and your 15 to be green, obviously, in order for a buy. But now this is a lower probability. Trading to our blue zone is lower probability than trading from our blue zone. There you go. US 30 would have hit its target. As mentioned before, there's your entry, this candle here. As soon as we tapped the blue zone to the upside. And that would have been the TP. Here, obviously, we would wait for price to get above. Now, this is how you prevent FOMO, by the way. People get FOMO because they're looking at one asset and they have it in their mind. I woke up, I turned on my computer, I'm looking at the charts, I have to get something. So they desperately are searching, looking for any signs of any entry. Just put up 2 assets. Between the US 30 and between NAS, you're going to find an early entry model. And if you don't, that's fine too. Like I said, today is FOMC day. Not every day is going to be a day that you want to trade regardless. So, but here you go. If this was any other day, my team would have taken this trade right here. And actually, we have a couple of people based out of London. They would have probably taken this trade actually. That trade for 1 to 3 off the blue zone, early entry model. Everybody else, we would have taken this one right here. 9:55 Eastern Standard Time. A lot of confluence here. We're bouncing off the EMAs, we're bouncing off the blue zone. We're on the right side of that trade. This is a buy. We're green across the board. Just drop down and look for a fair value gap. That's it. Use that foothold. And we're only aiming for the last previous high low, which is right there. So on a day like today, where everything is volatile, do I think we're going to get up to the blue zone? I don't know. That's why I would rather trade from the blue zone once you get above it. You see that rejection? You want to see preferably a 2-candle rejection just like that, 1 wick and an engulfing. And then we look for a foothold on a smaller time frame, an ITH, ITL, and we take that to the previous day high. We're starting to get a bullish, actually I believe we already did. We got a bullish confirmation on both the indices. Another sign that kind of falls in suit with our confluence of a bullish day. And it's as simple as that. There's no point in complicating things. With the early entry model, it really is as simple as that. And half of the work we do for you. You can visually see it's an upside expansion model. You can visually see where the EMAs are sitting. The only thing you have to decipher is it a buy model or a sell model? And again, we go over that in the Learning Hub, how to decipher that. And again, nothing is 100%. I'm not saying once you have all of that confluence that this is going to be an airtight trade. I'm just saying the probabilities are high. You have a 70 to 75% probability of getting it right. And as long as you're managing your position well, and capital preservation is your first priority, even those losses should still keep you profitable at the end of the month. You're risking 1 to make 3. Here, you would have easily got that. Because once we're above, we don't want to see that candle drop below. Think about it. There's not a single candle. We had a drop through the blue zone. All of these wicked off the blue zone to the bottom. Remember, we weren't even looking for a sell. So these wouldn't have even faked us out. There's no way to get faked out when you're not looking in a direction. So none of these wicks would have done anything to us. This was the first candle that we saw close over the blue zone at 9:50 Eastern Standard. Now we're interested. Now we want to see it come back down to the blue zone and wick. There's your entry. Can't feel bad about that, even if the market turned on you. Again, keep in mind, you don't want to do this strategy on these heavy volatile news days like FOMC, but I'm saying if it was any other day, my entire team would have taken that trade. High probability. You're bouncing off the EMAs. You're above the blue zone, upside expansion model, green across the board. What's there to be afraid of? And then there's your target, top range. Don't get greedy. You know, there are people that, on this chart, we actually don't have the previous day's high-low marked up. But let's say if it was up here. Just want to aim for top range. More than enough room there. Aim for your 1 to 3. Here, still slowly moving up. We got a bullish confirmation. Could see a pullback and then an extension. On FOMC day, the other thing is, as soon as you have New York open, you'll see a lot of consolidation, especially on NAS. Because they're trying to engineer new liquidity. They want you to go in on a trade, and then when FOMC drops, which I believe is at 2 p.m.? Is it 2 or 2:30 Eastern Standard? Hold on. I believe it's 2. Yeah, 2 o'clock. The FOMC statement and press conference. Sorry, the press conference is at 2:30, that's right. The federal funds rate comes out at 2 o'clock. Have an economic calendar up here. We use Forex Factory. Doesn't matter which one you use, but you should have one at the top, a tab open, so you can just jump back and forth so you know when these days are. Know at the beginning of the week. Here we go. Here comes NAS. Let's see if it comes back up to our blue zone. Depending on the day and depending on the scenario, and we break down what those scenarios are, there are certain situations where you can use the blue zone as your take profit. As mentioned before, the market is drawn to this zone. This is not a coincidence that we bounced off here, pushed down, bounce, bounce, got over, bounced off of the exact same zone, went up, bounced up, through rejection, and now heading towards it. This is a very, very powerful algorithmic zone. That's the reason we use it. Keep in mind the markets are completely manipulated. You can only imagine how much AI is on the back end of this, kind of machine learning they're using. What we've created here essentially is an AI translator. We've marked out the most powerful zones for you. And there is one for London as well. This isn't just for NYC. This one is for NYC, but we have a different purple zone that we've marked out for London and Asia. That's how strong that one is. It actually frames the Asia Open, and it usually, on most days, there's a high probability chance it will frame the London reversal. There's a reversal that happens during London, and it's usually off this zone. So again, it's all about utilizing these high algorithmic zones for the early entry model. And that obviously ends as we go into the spotlight strategy, which begins at 10:30. So you want to be in and out by 10:30. Here, we would have been exactly at 10:30. That hit our TP. We're done as soon as you got confirmation. Now keep in mind, if you're using the early entry model and you do get a successful 1 to 3 trade, don't then also get greedy and wait for a spotlight confirmation. It's one or the other. The spotlight confirmation is in case you don't get an early entry model, and then you come in and you focus on potentially looking for something. But you'd be foolish to get one entry model, be successful, and then search for another. I'm not saying that you can't, but again, we're talking about getting greedy. Your goal is 1 to 3 every day. So if you get that bag in the morning, you should be done. Here comes NAS again, drawn to the blue zone. If it was any other day, there is actually enough confluence here that you could have traded back up to the blue zone. Not on FOMC day though. But you're bouncing off of a higher time frame PD array. That's one confluence. We've already swept previous day's low with that yellow line. That's your second confluence. And then you would have just looked for your entry model, your ITH, ITL. And here we go. Midpoint there is where we're forecasting. I want to see it get obviously over this, because remember, this is a upside expansion model. This is a buy model. We want to get past the midpoint of this to the other side. And then where normally we would just aim for these highs, I don't think that's enough. It's not enough R. So it would just be most likely previous day's high with that yellow line on any other day. And here comes NAS. Is that a coincidence? Are you starting to think that's a coincidence? That it just came into our blue zone? Or do you think that's an algorithm? And for those people that always talk about buying and selling pressure, what buying and selling pressure is here? There was no resistance and support level here. Not before it was painted. This was painted and then the support and level, and then it became a support and level. Sorry, a support and resistance level. It became that after it was painted. Same thing here. Why do we have candles rejecting off this point? What is so great about this point? It doesn't sit anywhere. Look, before it was painted, nothing was happening. Bang, 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 off of it, through it. How many wicks? How many wicks pushed off of here? So we've touched the blue zone. Again, I'd like to see it push through this and use the other side of it to then get up to the previous day high. We do have a confirmation, obviously, so this might be one of those days where we don't get a deep enough retracement. And this is how you pair these two strategies, by the way. With the blue zone always visible, you know where the market is going. Right here, for example, you already know that the blue zone is well below we're most likely going to trend up until we hit those higher time frame PD arrays, which again, I don't have marked on this chart, but you should. That's how the early entry model works. You mark out your daily fair value gap, your 4-hour fair value gap, your previous day high-low. Again, that's all in the Learning Hub. We show you how to mark that up. Those are the main ones that can adjust and or reflect where we're going. That's the only thing that can change our bias. You can have a sell model that bounces off a 4-hour fair value gap and then suddenly becomes a buy model. And you have to be, again, quick to assess that. Now, once you have a broken model, we don't trade. So it's not going to affect us on that level. It's just to let us know that, hey, now your model has changed. So you're not looking for example, if we had a sell model and it hit a 4-hour fair value gap down here, I would not be looking for a sell off the blue zone. Nor would I be looking for a buy off the blue zone. I mean, again, there are people that risk it and take it, but our probabilities decrease. Once your model is broken, you stop trading. It's no different than how when we're trading the spotlight strategy and we break the zone to both sides, that's a false state. We're done. That's how we prevent ourselves, save ourselves from getting into ridiculous situations. Remember, there's only 5%. Last time I checked, I think it's 95% of traders fail, and it's because they don't stick to the rules. You've got to stick to the rules. Now, everybody's going to blow out at least one, maybe even 2 accounts before they realize that they have to stick to the rules, that they're the only one standing in their way. There is an ocean of abundance. There's an ocean of money to be made. And 99% of the time, it's the individual trader that's standing in his own way. Because they get FOMO, because they get impulsive, because they get emotional. It's removing human emotions and trading almost like a robot that allows traders to be successful. If you enter a position and suddenly you see it in the red and you're panicking, you've over-leveraged. Emotional. Made the wrong mistake. A robot would never have made that mistake. It would have picked the right lot size. It would have used a lot size calculator, figured out the exact lot size for that asset, and entered a position that it knew was going to be a 1 to 3, risking only 1%. And then you jump out early when the market actually ends up going to your TP. Look at this two candle rejection right off of our blue zone. Now keep in mind, when we see a 2 candle rejection, about to close, let's make this a true 2 candle rejection. There you go. That right there is a telltale sign that this market might not even get above our blue zone. Now, if we were only looking for a buy, and we never even got above the blue zone, now keep in mind this is obviously advice for a trade that's taken in the right time frame. We're well past the early entry model, but we can still use this to kind of dictate our narrative. Now, we still have a bullish confirmation, and we were looking for a retracement. So that could frame our retracement. But when you see this kind of 2 candle rejection, and this is what you want to see technically when you're looking at the market in your directional bias. A 2 candle rejection is a beautiful thing off of a 20 EMA, off of your zone when it's in the right direction. 2 candle rejection here. You got to be cautious. Now that could frame again our retracement and then extension. That's why you got to wait till you get over the blue zone. And that's how people use these 2 strategies and how they will be able to use these 2 indicators in tandem and see that this all matches up. This just becomes another point of confluence for you then. We're above the blue zone. Everything is green. We're clearly heading up. 90% of traders will tell you if you can just tell them what direction the market's going to go, they'll be successful. If I told you the biggest play of the day was going to be a buy, and you entered here, and the market dropped on you, can you imagine how scared you'd be? Even if I told you that the biggest move was going to be a buy, that huge drop and most people would have jumped out. So it's not about knowing which direction the market's going, it's about the entry. Your entry has to be perfect. Enter at the most proper place. For example, look at this entry. This would have been the only entry we would have taken today. And has the market gone below that? Right off the blue zone. That's our entry. Market never came back down below that. You don't enter on taps. You enter on proper confluence, two candle rejection, wick, on the right side of the trade, upside expansion model, match up all of it. We have a lot of confluence here, but we're not above the blue zone. So as mentioned before, that this indicator will be ready most likely next week. We're just kind of cleaning up a couple of things. And then by January, we will have a full swing trading strategy for you as well, for people who want to do long-term holds on Forex, stocks. For example, our swing trading strategy got a lot of my team in on Tesla at I believe it was 180, around 180, 190 people got in on Tesla. And now Tesla is sitting at 476 right now. People have used the swing trading strategy to get in on Bitcoin. Somewhere around 76,000. Now it's sitting at, there's Bitcoin for you right there, 104,000. So our swing trading strategy is, again, a longer term hold. Sometimes could be weeks, as long as you're prepared for it. But that's up to you to decide. Our job is just to let you know where the zones are and how to actually figure out. Now, there's no indicator for that as of yet. We are working on one. It's a little hard to kind of create an indicator that works on multi-time frame, both the daily, the 4-hour, the 1-hour, etc. So we're looking into it, but right now we will have a strategy at least on paper for you. And the beautiful thing is, it's the easiest strategy to learn. I believe the video itself is, again, 30 minutes, 40 minutes, and you learn an entire strategy on how to swing trade and hold trades longer. And that's for Forex, stocks, crypto. You can use it on anything, commodities. So that'll be after January. That should be in the Learning Hub. So now you'll have 3 strategies. You have the early entry model. You have our spotlight strategy. That's the crux of our entire platform. And you'll have the swing trading strategy for all other stocks, Forex, etc. That covers all your bases. You should have, that way you can go in. Right now, for example, right now, I personally have 2 trades that are running on Forex using the swing trading strategy. Right now, there's at least 2 stocks that I just jumped in on using the same swing trading strategy. Today, if it was any other day, I would have used the early entry model to jump in on this trade, which was successful. And then if it was any other day, I would have used the spotlight strategy. This covers all your bases. Um, and I've said this before too, it's the time zone you're in too. I am not in the best time zone. I wish I was in a better. I would actually love to trade the uh, London time zone. You get cleaner price action, get your confirmation, retracement, extension. Um, I don't have it painted on here, but I believe, if I'm not mistaken, um, starting tomorrow, we will have the purple zone painted on here as well. I'm not 100% sure if this actually framed the purple. I believe it did. Yeah, London bounced off the purple zone. I believe the purple zone is here, if I'm not mistaken. Look at that. I would have taken that trade right there off the 20 EMA, purple zone rejection. And again, this will all be in the next indicator. You'll have the purple zone that frames the Asia. Sorry, I'm just checking something here. Yeah, it frames both of those up actually. Sorry, my mistake. That's the Asia. Yeah, that's the Asia session. So it framed the Asia session. It didn't bounce off the London session. This is the London session. Got a little turned around there. So the blue zone was already painted. We got a bearish confirmation right into the blue zone. So again, going forward, the purple and the blue zones will be painted on, and we will start utilizing more of these. And the purple zone does run all the way through the New York session. You can use that as well as an area of rejection, just becomes another point of confluence. Same thing with the blue zone. Becomes an area that you want to draw to, or that the market, sorry, I should say, is drawing to or rejecting off of. So we will conclude the session there. Again, we weren't really looking for a trade today. Crude oil inventories, FOMC, way too volatile today. Let me take a look at the calendar short tomorrow. Tomorrow we have unemployment claims at 8:30. And then some minor news at 10 o'clock. So we will be taking a look tomorrow, most likely at oil, and we'll see what the market offers us. But thanks for joining us. Make sure you check us out on fractaleffects.com, where we teach high probability trading. Please hit the subscribe button, turn on your notifications. Hopefully, if you learned something today, please make sure to tell people about it. We've got to build up our community. We will be introducing a Discord soon as well. But have a great rest of the day, and we'll see you tomorrow. Take care.